When it comes to MicroStrategy-focused income ETFs, the past 2 months have been rough across the board, but some funds have managed to hold up a little better than others. In this breakdown, we're looking at the best and worst performers. Looking at total return numbers from June 6th to August 19th, 2025, with stats pulled directly from Yahoo Finance, the performance of some of these income ETFs might genuinely surprise you. We'll start with the baseline, MicroStrategy stock itself. Between June 6th and August 19th, it slid roughly 10%. That's our benchmark. It's been a tough 2 months for MSTR holders, and the numbers make that clear. Now, starting at the very bottom, the worst performing MicroStrategy income ETF was MST, down a brutal negative 22.5%, even after including its distributions. MST is a leveraged play on MSTR designed for those who want amplified exposure to the stock's volatility and growth. On top of that, it tries to generate income using a credit call spread strategy. That's meant to smooth out risk and provide some cash flow. So the fund's pitch is clear: leverage plus income. The problem, as we've seen, is that daily reset leverage can quickly turn into a drag during rough periods. Next up is MSTY, the YieldMax MSTR Option Income Strategy ETF, which came in at about negative 7.52%. Nowhere near as bad as MST. It highlights how much leverage choice and option coverage can change outcomes. MSTY has been the darling of the income investing crowd. Investors love it for those massive payouts, but in this stretch, it hasn't exactly been the star performer among the MicroStrategy-linked single stock ETFs. Close behind, we have MSII, the REX MSTR Growth and Income ETF, down just over negative 7%. Structurally, this fund splits its exposure. Half of the portfolio is leveraged long MSTR, and the other half writes covered calls. Moving higher, IMST landed at about negative 9.67%. Interestingly, that's fairly close to MicroStrategy's own decline, showing that while you did get income distributions along the way, total return stayed broadly in line with the stock. IMST, the Bitwise MSTR Option Income Strategy ETF, takes a hands-on approach. Through active daily management, the fund runs an option strategy designed to generate consistent monthly income for investors, while still offering exposure to MicroStrategy, though with gains capped on the upside. And finally, the best of the group was MSTE, the Harvest MicroStrategy Enhanced High Income Shares ETF, which finished down only negative 3.19%. Compared to everything else in this lineup, that's a big win. It shows that even within this niche of high-income MicroStrategy funds, some strategies are significantly more defensive than others. The Harvest MicroStrategy Enhanced High Income Shares ETF gives investors direct exposure to MicroStrategy's growth while layering an active covered call strategy on up to half of the position to generate high monthly cash distributions. On top of that, it applies modest leverage of about 25% to enhance both income and growth potential. And importantly, it holds the actual stock, not synthetic derivatives. I've been genuinely impressed with this approach because it proves that you can capture income without necessarily sacrificing your capital along the way. So over the past 2 months, the performance leaderboard looks like this. MSTE takes the top spot, followed by MSII, then MSTY, after that IMST, and in last place is MST. Now keep in mind, this is only based on a short 2-month window. It's way too early to draw long-term conclusions. What will be really interesting is to check back at the 6-month mark, or even a full year, to see how these funds perform over a longer horizon. That's when the true winners and laggards will really start to show themselves. If this breakdown gave you any value or insight into how these funds are stacking up, don't forget to hit that like button, subscribe to the channel, and tap the notification bell so you'll get updated the moment we post more videos like this. And I want to hear from you. Which of these funds do you hold in your portfolio, and how are they performing for you so far? Drop your thoughts in the comments. Thanks for watching, and I'll see you in the next one.